それではお待たせいたしました。ピッチセッションへと移ります。このセッションのテーマはアトラクション U 金融系
This is the pitch session, and the theme is Attraction U, Foreign Financial Firm Discovery and Investment Attraction Program, New Entrants to Tokyo. Let me brief you very briefly about this project. Attraction U is a project inviting, discovering the startups in the whole world. From world over, the business models are held by promising companies, and it will activate the Tokyo as the financial center. So the purpose is to enhance the position of Tokyo as the financial center. So at this Attraction U, we have selected companies after a very rigorous screening. So they will talk about their activities as well as their thoughts and ambition about the Tokyo market. So this is going to be the pitch presentation. So we will begin the pitch session. So Select Equity Japan representative Lynch-san, Jake Lynch. Good day, ladies and gentlemen. Thank you very much for giving me the time. I appreciate it from the bottom of my heart. Thank you very much for this opportunity. Tokyo Metropolitan Government and the TMF and the TFM, I thank them. I am Jake Lynch, a representative of FinCity, and I will turn to English.
By our chairman and CEO, George Learning, when he was 23 years old with $80,000. In the early days, we were a research shop, and we published equity research on small and mid-cap companies and sold that to the institutional investors. Today, we manage approximately $30 billion US across a number of strategies, with about half the capital deployed in the United States and half the capital ex-US, including about $1 billion here in Japan. We offer both long-short and long-only strategies. We have a team of about 200, mostly based in New York City, of which 74 are investment professionals. We are 100% employee-owned, and we have over $1 billion in employee capital invested alongside our strategies. And George continues to act as the PM for our flagship long-short strategy. Well, we've been investing in Japan for over 15 years. In 2025, we started the process of establishing a permanent presence in this important market. We've lodged our application for a license with the JFSA and look forward to receiving that license sometime this year. Now, when asset allocators review our holdings, they often remark that our portfolios are highly differentiated from the typical growth-oriented funds. And I'll give you 5 reasons why that is. Firstly, our focus on quality. For over 30 years, the team has had a very clear mission: identify the highest quality companies available on the public markets and build a deep understanding of those value chains. We're looking for companies that can compound their cash earnings at over a 10% rate with a high degree of predictability over the next 5 or 10 years. We look for deep moats, secular tailwinds, and high-quality management, high ROICs, strong balance sheets. We really think of ourselves as owners of businesses rather than as traders of stocks. We typically avoid highly regulated sectors such as banks and telecoms. We keep clear of commoditized industries, as well as industries where the ability to predict is low, such as consumer tech. That means that 70% of listed equities we won't buy at any price. Give you a couple of examples. We have heavy exposure in the semiconductor supply chain, but little in consumer tech. Of the magnificent 7, 4 meet our quality criteria, but 3 do not. Second, we have deep expertise in mid-caps. We do have large-cap strategies that have performed well, but we started as a mid-cap research house, and mid-cap specialization remains deeply embedded in our culture. Third, we are fiercely independent. We don't use sell-side research. We don't attend idea dinners. We don't broadcast our holdings in the press. For 35 years, our headquarters in New York has been in the same building in the East Village, far from other managers. We are going to make mistakes, but they are going to be our own mistakes. Fourth, we have a team of 17 former forensic investigative journalists, and this team performs deep dives on value chains that we care about, and this gives us differentiated insights that the standard expert networks cannot. Fifth, we are patient and disciplined. We'll typically study a company for 2 years before we initiate a position, or longer if we have to wait for a valuation opportunity to emerge. In our flagship long-short strategy, we are long biased. The strategy typically runs about 200 to 220% gross, and net exposure is typically in the mid-70s. As a result, since inception, we've tended to capture roughly 2/3 of up markets and only 1/3 of down markets, with a beta to the S&P 500 of around 0.4. What do we short? We need a variant view, different from the market, along with catalysts. We do have a dedicated short team, and our research process regularly turns up companies with aggressive accounting, deteriorating pricing power, value chain disruption, etc. Now, before I finish, I do want to touch briefly on where we see markets today. The slide behind me shows the relative performance of quality stocks versus the S&P 500. As you can see, 2025 was an exceptionally poor year for quality. To give you a sense here on valuations, over the past 10 years, our flagship long-short strategy, in our long portfolio, high-quality stocks had an average valuation premium to the S&P 500 of 21%. We're paying 21% more than the S&P 500. Today, if you look at our portfolio, it's at a 6% discount. If you look at mid-caps, the Russell Mid-Cap Index over the last 10 years averaged a 3% discount to the S&P 500. Today, that's a 22% discount. The market is not positioned in quality, and it is not positioned in mid-caps, and that's really our sweet spot. And if you can read the chart, to find another parallel period, you have to go back to the late 90s in the internet bubble. Now, we do not claim any knowledge as to the timing of when a cycle may turn, but I would direct your attention to the last comparable period after the internet bubble and then the subsequent multi-year outperformance of quality starting in 2000. We think we're in an excellent position to capture the upside from the segment of the market that's consistently delivered the best long-term returns, quality growth. Thank you very much for your attention. ありがとうございます。
リンチ様、ありがとうございました。どうぞ拍手でお送りください。では2人目です。2人目はアルファスクエアグループディレクターブランドン・グー様です。どうぞ拍手でお迎えいただきたいと思います。
Good afternoon, everyone. It's great to be here, and thank you so much for having me. My name is Brandon, and I'm with Alpha Square Group, or ASG. So before I dive deeper into my presentation, I'd like to show you a brief introductory video for our company. Thank you so much. Yeah, that's just a brief introductory of all the companies that we've invested in for the past few years. So I'd like to show the presentation deck. Thank you. ASG is a New York-based investment firm founded in 2015 with strong family office DNA. Today, we manage about $1.5 billion in assets and are SEC registered in the US. With the tremendous help from FinCity, we've successfully opened our Marunouchi office last year. We invest globally across both public and private sectors with a strong focus on innovation-driven sectors. But more than just capital, ASG was built around one simple idea, that great outcomes come from being good company. That philosophy shapes everything we do. At a high level, ASG operates as a multi-asset, multi-strategy platform. On the private side, we're deeply focused on cloud and AI infrastructure, enterprise software and SaaS, cybersecurity, robotics, and applied AI. We've invested in over 50 venture capital and private equity funds around the world. On the public side, we invest across equities and hedge fund strategies, including equity long short, event-driven, macro, relative value, and fund of funds, drawing on insights from 20+ hedge fund investment and our own internal portfolio management experience. In parallel, we also have long-standing strategies in first, real estate, spanning both equity and credit across public and private markets. Second, art and culture assets, where we work closely with leading collectors, institutions, and artists globally. This diversification is very intentional. It allows us to stay resilient across cycles while remaining highly selective where we believe innovation is compounding the fastest. So one of ASG's most important strengths is our global network. We work closely with over 700 family offices worldwide, alongside institutional investors, funders, and corporate leaders across the US, Canada, Japan, Hong Kong, Singapore, and beyond. So in the US alone, we're connected to over 8,000 AI, SaaS, and robotic companies, which give us a unique vantage point on where technology is heading, not just from an investment perspective, but from a real operating and adoption standpoint. So because of this position, ASG often serves as a trusted nexus, connecting capital, technology, and strategic partners across regions. So what makes ASG a bit different is that we don't view ourselves as just an allocator or investor. We're very hands-on in value creation. For founders, that means helping with strategic partners, supporting international expansion, connecting them to the right long-term capital and corporate partners. For family offices and investors, that means curated access to high-quality private opportunities, thoughtful asset allocation across generations, a long-term trust-based approach rather than transactional deal flow. This mindset extends beyond investment. ASG also places a strong emphasis on community and social impact. Each year, we host flagship events across Asia and the US, bringing together family offices, funders, C-level executives, and thought leaders. These gatherings aren't about pitching. They're about sharing perspectives on technology, capital, legacy, and responsibility. We believe that capital, when deployed thoughtfully, can support not just financial returns, but also culture development, human connection, and long-term impact. So that's why ASG has remained active at the intersection of technology, art, and human capital. So to summarize, Alpha Square Group is built on 3 core pillars. First, sharp edge, deep insight into innovation and market transitions. Second, deep resources, capital, networks, and long-standing partnerships. The third, but not the least, trusted nexus, connecting people who should be working together. We are long-term in mindset, global in perspective, and relationship at our core. So thank you again for the opportunity to be here. I'm looking forward to the conversations ahead. Thank you so much.
グー様ありがとうございました。 どうぞ拍手でお送りいただきたいと思います。
Mr. Gu. Thank you very much, Mr. Gu. A round of applause for the speaker, please. The third is a speaker from Rise Technology, Client Success Director, Mr. Jackie Jia, Client Success Director of Rise Technologies. So over to you, sir.
Very good afternoon, everyone. 皆さん、こんにちは。
Good afternoon, everyone.
Jackie Jia, not Jackie Chan from Hong Kong, unfortunately. So I'm the director responsible for client success at Ninnovate, together with our technology platform, RACE. So it's truly a pleasure to be here today with everyone. So now some of you may ask by wondering, what is really Ninnovate and the RACE? I will explain it. Promise in a local way. So we are here at Tokyo. We love sushi and sashimi, like many of you. Whenever we eat sushi and sashimi, there's one thing, always naturally come out. Wasabi. Not the main dish, but absolutely essential. That's who we are. We are not asset managers. We are not fund managers. We are the partner behind them. Freeing their hands so that they can focus on what really matters. Value creation. So at Ninnovate, everything we do comes to these two ideas. We empower assets, and we enable growth through people, process, and technology. Ninnovate is a leading asset servicing provider focused on transforming alternative investment industry through innovation and technology. We support the entire fund life cycle, from launch to operation to compliance, reporting, and the investor engagements. But we go beyond traditional fund administration. Our services are powered by RACE, our proprietary cloud-based multi-platform ecosystem. RACE unifies fundraising, fund operation, compliance, accounting, reporting, and the insights into one seamless network. So this means better connectivity, real-time data, and scalable operations across the entire investment cycle. So today, we serve clients globally across APAC, Europe, Asia Pacific, combining global standard with local expertise. Our vision is simple but ambitious: to build the world's most connected, intelligent, and trusted ecosystem for asset servicing. And our mission is to simplify the complexity, enhance transparency, and help our client to scale with confidence. So we truly believe in thinking global, acting local. Today we support over $140 billion in asset under administration, more than 800 funds with 400 plus in-house experts across 13 global offices. include Tokyo. Our focus is firmly in the private assets, private equity, venture capital, real estate, private debt, fund of fund, and of course, their respected investors. So simply, wherever our client operates, we are at the ground, speaking the same language, understanding local regulations, and delivering with global consistency. So what we really do, from the fund services point of view, we provide end-to-end fund administration, professional investor relations, independent portfolio monitoring, regulatory and ESG reporting, also regulatory compliance support, corporate services around all the different jurisdictions. And also we offer technology consulting to enable scalable operation to help our clients. With expert people supported by powerful technology, we strengthen governance, improve data clarity, and allow fund managers to focus on performance, not the day-to-day tedious operations. And second, let me briefly introduce our technology RACE. The full name of RACE is Robust Alternative Investment System Exchange. I call it RACE, too long, even I can't remember. So RACE is not just a system, it's an integrated ecosystem. It connects fundraising, operations, compliance, and reporting into one automated workflow, powering faster decision and better outcomes. From investor communication, fund accounting, portfolio monitoring, compliance automation, HR management, to service desk, everything operated in one secure, cloud-based platform. So the benefit to fund managers and also service providers is clear. It's one all-in-one platform, higher efficiency, greater transparency, better investor communication, global scalability, and enterprise-grade security. In short, it's less friction, more insights, better control. So for our past 10 years servicing our clients, we are grateful that our commitment to premium services and the quality deliveries has been recognized by the markets. All those awards belongs not just to our own team, also our respectful clients who trust us as a long-time partners. Clients choose us, Ninaway and RACE, just for 5 key reasons. Our technology advantage, our integrated ecosystems, our global presence and the local expertise, and our award-winning solutions, and most importantly, our client-centric partnership mindsets. We don't just deliver services or selling technology solutions. We build relationships. So finally, I want to speak directly to Japan private market participants. Out of deep respect for these markets, we already opened our Tokyo office and are actively building a local team. We are committed to learning the local markets, local regulations, local expectations. By combining Japanese market understanding with our global expertise and technology, we aim to deliver exceptional services to fund managers and investors here in Japan. Thank you very much. Moro, arigato gozaimasu.
Thank you very much.
ジア様、ありがとうございます。
Thank you very much, Mr. Jia. Big round of applause, please. And then we go to the fourth speaker, and that is Mr. Hayata Tokizawa, Managing Director of FinCapital. Please welcome him with a big round of applause. Thank you very much for giving me the time. I'm Tokizawa of FinCapital. Today, I would like to talk about where we invest and also why we are selected as a partner by many institutional investors. Finance and technology are merging. It's not only the capital allocation, the structural change is very important in order to partner with institutional investors. So we are the platform for that. In 2018, our company was made, and it is a life cycle type investment company specializing in enterprise software. We have asset under management of $1.5 billion, and then we have received a $300 million commitment. So next year we will have AUM of $2 billion. 120 companies we invest, and VC and growth equity. Both are managed, so this is the full life cycle type of investment. So growth stage until IPO, we have a consistency of all processes included. Why come we are selected as LPs? I think there are three reasons. The first reason is that we have a thorough specialization into the domain, into fintech and finance domain, and also former operators make the investment judgment. Former operators have the mindset of the founders or the business side owners' mindset. The third one is Lighthouse. This is the management platform for AI-based, and we have the consistent management from discovering the project until the monitoring after the investment. As a result, we are in the upper 15% of Cambridge benchmark. Many LPs look into the diversified investment, but not only that, they regard this as us as the strategic investment object. Now, what is the domain of our investment? Software is the area where we concentrate, especially three sectors: AI, cyber risk technology, deep tech, that's the first sector, and bank tech, wealth assets, and insurance tech, that is vertical software, and then the third sector will be the payment sector. So $25 trillion is the market that we look into. So we are investing in the center of a structural change in this huge market. This is the introduction of the team members. Founding Logan Allen, founder and managing partner. He was a former operator of the organization, also including Japanese members. We have the team. So for the Japanese investors, we can provide local services being here in Japan. FinCapital. Symbolizing it, it is the strategic partner framework which characterizes our company. 60% are strategic LPs. Many financial institutions have come into our group. So LP is not only the capital provider. We regard them as the people who will create values with us, a strategic partner. So to the strategic partners, LPs, Lighthouse is the platform through which we provide the market intelligence access. And also we provide co-investment opportunities to LPs. So due diligence is supported by us. Portfolio companies, commercial linkage is something that we provide. Up until now, we have introduced more than 700 business opportunities, and it's not only the introductions, we follow them until the actual commercialization. So it is not the financial return, but we provide a strategic return too. So it is not only to where you invest, but with whom you collaborate. So inside network, we are providing opportunities of various kinds. Thank you very much for giving us the precious time of yours. Thank you.
ました。どうぞ。
Tokizawa-san, thank you. Let's thank him with a round of applause. The fifth speaker is with KBRA. Ms. Mickey Monroe-Sheridan, Head of Business Development, APAC, KBRA. Thank you for the kind introduction. My name is Monroe of KBRA. I'm honored to be given this great opportunity, and thank you for being here. Let me introduce you to KBRA very briefly. We are the fourth global credit rating agency. Our headquarters exist in the United States, and we have offices in Europe, UK, and Japan. When it comes to credit rating, financial institutes are well aware of what we do. AAA, AA, BBB, these are the ratings that are given. And from an independent perspective, we look at companies and the credit worthiness of companies. Our track record, about 7,000 issuers, the total amount $4.1 trillion, and the number of credit ratings 87,000. We have a wide sector coverage: sovereign, operating companies, financial institutions, as well as asset-backed securities, structured finance, fund finance, private credits. These are included in our wide coverage. ABS, fund finance. In market ranking, we are ranked as one of the top players. In 2010, at the time of the global financial crisis, we were founded. From such backdrop, we have strength in transparency and deep analysis. And as the first Asian office, last year in January, we established our Tokyo office. And thereafter, we have been speaking at major conferences in Japan and Asia. Last year, during the Japan Week, KBRA Japan hosted the first ever KBRA Japan hosted seminar. We have operations on global basis: US, Europe, Canada, UK, and Taiwan. We have registered at regulatory authorities of these countries and regions. And regarding Japan, currently there are 5 registered credit rating agencies, and we have been the first applicant to apply to the Japan Financial Services Agency to be certified as a new credit rating agency. In our wide coverage, we focus on private credit and structured finance. These are areas of our competitiveness. Private credit is a word that's positively taken but negatively taken in recent weeks and months. But as the word private describes, information is limited. So how can information be collected, and how should analysis be done? These are some of the questions asked by many players. And the excellence of products and flexibility of product offers a wide opportunity, so amount of investment is increasing, and that kind of global trend has made inflows into the Japanese market as well. And direct lending is the main means in private credit, but the means have diversified: fund finance, fund investment vehicle, private ABF. These are some of the new channels where investment is coming in through diversification of channels. If I may supplement, in the area of direct lending, after the global financial crisis, regulations were tightened and bank lending became limited. So direct lending emerged in the private capital market. This is taking root as a main means of financing, and investors who are seeking high yield is being funneled into direct lending. And in the midst of such flow, KBRA is engaged in fund finance, rated VD note, CFO, ABF. We are engaged and granting credit ratings to wide-ranging sectors. And rating of fund transactions is growing. 770 deals have been granted credit rating by KBRA. We're not engaged only in private credits. We are offering new perspective in credit rating for the Japanese market at large. Recently, hybrid business model is increasing, such as fusion of technology and finance. There are issuers that are not limited to one particular sector, so the conventional method of evaluation is no longer fit, and therefore using our sector intersector analysis framework, we are offering appropriate analysis and evaluation and assessment. And existing credit analysis is being supplemented by our independent perspective in order to contribute to the decision-making of Japanese investors. As we see new products and instruments coming out day by day, we want to contribute to the decision-making of Japanese investors and also contribute to the expansion of the investment universe. Lastly, at our website, we offer many research papers downloadable, and we also offer credit research data as well. Our website is rich of information, so those of you who are interested, please access our website and give us inquiries. Thank you once again for your kind attention.
ありがとうございました。
Thank you very much. Big round of applause to her presentation. With this, we will complete the pitch session.